Good morning, ladies and gentlemen. Wassalamu alaikum wa rahmatullahi wa barakatuh. My name is Talal Yassin, and I will be the moderator for this hopefully extremely interesting session about mobilising capital from Waqf, pension funds and unit trusts and developing the best practices around the world. Today we have with us on this panel some of the world's leading thought leaders in this area. I'll start with Datuk Sharir Ridha Ridwan, the Chief Executive Officer of the famous Employees Provident Fund Malaysia. We have Dr. Shamsiya Abdul Karim, the Deputy Director of Asset Development in the Islamic Religious Council of Singapore. We have Mr. Thomas Paulson, Chief Executive Officer and Co-founder, Fala Capital, the United States of America. And we have Mr. Abdullah Al-Fuzan, Chairman for the Investor for Securities Co. Kingdom of Saudi Arabia. And unfortunately you have me, Talal Yassin, the Managing Director of Crescent Wealth Australia. Today the session will commence in the following manner. I will speak for 5 minutes about pensions, followed by Datuk Sharil, followed by Dr. Shamsiya, followed by Mr. Thompson, and then Mr. Abdullah for 5 minutes each, and then we'll have, inshaAllah, half an hour question and answer session about this very, very important topic. Given that I'll be covering the pension side of things, if we can put up the first PowerPoint. Some important facts I will bring today, and hopefully I'll be using my 5 minutes to introduce pension funds, and more specifically Islamic pension funds to you today. The world's population has 23% of it being from a Muslim faith, or from the Muslim faith. There are 7 billion Muslims. From 7 billion people of the world population, Muslims constitute 23%. You then compare that to the global pension funds based on their assets, and there's an excess of 27 trillion, of which Islamic pension funds constitute. That's less than 1%. When you compare pension funds for people of the Islamic faith, they constitute less than 1% pro rata of the world's population, but we constitute 23% in terms of population. There is indeed a long, long way to go to put in a system that provides for the retirement of people of the Muslim faith in dignity and in honour in their old age. In most of the Muslim world, retirement or being old, your superannuation, your pension fund, your pension scheme are your children or your family. That is the main plan. But unfortunately it does not take into account life's vicissitudes. If your children don't make it, if your children leave, if your children change, if your children pass away before you do. And it is very, very important that pension funds and pension schemes, or as we call them in Australia, saving along the way as you grow into an older person in order to be able to look after yourself in dignity and in honour. And this startling fact underlines the importance of pension schemes and the fact that we are so far behind compared to the rest of the world. On the other side of the ledger, there are 300 pension funds in the world that manage just under $15 trillion. Trillion. $15,000 billion. That's a very substantial number. But then, when you look at those top 300 pension funds that manage the majority of pension fund money around the world, only 3 come from an OIC country. We have one with us today, EPF, a fantastic organisation. But we are less than 1%, or 1/3% to be precise, in these facts. Another startling fact about pension funds and why we need them is if you look at the world's population and you look at the the Organisation of Islamic Countries, we have 1.6 billion people and we have approximately 10,000 GDP per head. The rest of the world is 5.4 billion. Of 5.4 billion is at least 50% above that. And in OECD countries, of 1.3 billion people, it's at least double the OIC countries. And I've got to say, a lot of the OIC countries are in a position to improve this quite dramatically. But you need to look on both sides of the ledger. The need for pensions and the recognition that we need our elderly or older people to retire in dignity and honour, and to have the infrastructure and the systems and the organisations to do such investment. And pension funds, as you can see, we only have 3 in the top 300. So we need to really work on that. In Australia, and that's by way of an example in terms of the success of a pension scheme, we have $1.7 trillion of funds under management. Pension schemes and pension funds constitute themselves 2% of the GDP from fees. That's a very significant amount of money earned from these pension fund schemes, which could be replicated in OIC countries. And that concludes my 5 minutes by introducing pension funds, and indeed Islamic pension funds, such as Crescent Wealth in Australia, and the long way we have to go to create a system that works around the world to help our seniors retire in dignity and in honour. Thank you very much, ladies and gentlemen. I would now like to call upon the stage to present his 5 minutes, Datuk Sharil Ridza Ridwan, the Chief Executive Officer of Employees Provident Fund, Malaysia.
Thank you, Talal. Assalamualaikum and good morning to everybody here. I'll spend a few minutes just telling everybody what EPF is, for those who don't know us, and then I'll go straight into what we are doing in respect with Sharia assets and the growth of Sharia capital from our point of view. Now, in terms of the EPF itself, we are basically a defined contribution scheme which covers all the private sector workers of Malaysia. We today represent 14 million workers in Malaysia, 14 million individual accounts that are held with the EPF. With a total fund size of roughly about $200 billion US. Every month, every single worker and the employer contributes towards their retirement fund. And essentially, we provide the scheme which ensures that for the workers of Malaysia, they have a comfortable and honourable retirement upon the end of their working life. We essentially have a few key targets. Primarily, we are focused on providing an inflation-adjusted return to all the workers of Malaysia. And we essentially target the rate of inflation plus 200 basis points as our minimum target for returns. And over the past few years, we've generally averaged about inflation plus 300 to 350 basis points. But this, of course, will vary according to the economic cycle. As you can see from this slide here, while generally we've been able to perform, there have been occasions, only 1 year in the last 20 or so, where we've basically been unable to meet the target. And that was due to the global financial crisis in 2008. When you look at this in respect of the funds, I think as Talal was mentioning earlier, the EPF today is the 7th largest fund of its kind in the world. We mobilize roughly about $200 billion US today. The numbers you see here are based on 2013's numbers. And we are in a peer group which includes people like the Norwegians, the Japanese. In terms of basically pension funds from Islamic or OIC countries, we're probably the largest in the world today. And I'll go into some detail about how we then manage, from our point of view, the sums that we have with respect to Sharia compliant assets. When we look at the spread of the EPF's investments, well, we are primarily invested in Malaysia, as you'd imagine, given our liabilities are in Malaysian ringgit. We have altogether roughly about 23% of our assets overseas, primarily in equities, as well as in real estate and infrastructure assets. Those are the ones which where we have done a lot in terms of global equities. On the Sharia side, the EPF has been invested in Sharia assets for a very long time. But over the last few years, we've decided that this is going to be a major focus for us, primarily from the point of view of demand. Out of our 14 million members, roughly about half of them are Muslims, representing basically the composition of the workforce in Malaysia. And there's been increasing demand among our workforce to ensure that we have Sharia-compliant assets, even though the EPF itself today is not a fully Sharia-compliant fund. We have plans in the future to probably devolve and create a fully Sharia-compliant retirement fund, but that will be coming probably a few years from now. So in the meantime, we've been focused since 2010 primarily in developing the in-house capabilities to invest in Sharia assets. We have our own Sharia Advisory Committee. Throughout all our asset classes, we have teams that are working focused basically on accumulating Sharia assets as well. So since 2010, our Sharia Asset Committee has been in place. And we've actually been actively growing our Sharia assets. Today, as of 2014, Sharia assets are approximately about 40% of our total asset size now. We are probably the single largest pool of Sharia-compliant assets under any institution in the world today. So if you look basically in terms of how the Sharia-compliant assets break down across all our asset classes, it's quite easy to see basically that in fixed income and in equity especially, we've been able to accumulate substantial amounts of Sharia assets. In inflation assets, this is what we call our infrastructure, properties and everything else. The number looks small, primarily because when we finance our global assets in particular, the availability of global Sharia financing for this kind of assets is still fairly limited, even though it is available in Malaysia. And if you look basically at our total assets today, roughly about 39%. And like I said, the biggest chunk of it is in equities, where we have about nearly half of our equity positions are actually Sharia compliant today. This is basically a more detailed bar breakdown that you can see in terms of how we do this. But even in our conventional assets, just to let everybody know, we also take the view that we are an ethical investor, and our non-Sharia or conventional assets mirrors our Sharia assets quite closely as well, in the sense that we do not invest in things like gaming, weapons manufacture, alcohol, and other non-ethical investments. Compared to the Malaysian domestic banking industry as a whole, the EPF's total Islamic assets of roughly about $70 billion is about 40% of the total domestic banking Sharia compliant assets. So in that sense, the EPF is a very large factor, a very large component of the Malaysian industry. And what we've been doing basically in order to develop the Sharia assets industry, not only Malaysia but globally, is we've actually been funding or mandating a fairly large number of external fund managers who work with us in order to basically provide that expertise to the industry as a whole. And over the years, we've actually grown. We now have more than 70 billion ringgit, which are managed for us by external mandates. These are funds which we could actually manage internally, but we felt basically that part of our mission is also to grow the industry as a whole and grow capabilities in the industry. And what we've done basically is to actually encourage the growth of external fund managers through this manner. So with that, I'll leave time for questions for the other presenters. Thank you very much.
Thank you very much, Datuk Shahril. I'd now like to call upon Dr. Shamsiya Abdul Karim, Deputy Director of Asset Development, Islamic Religious Council of Singapore.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala wabarakatuh. Alhamdulillah, today I'll be talking about the mobilization of Waqf assets, the experience in Singapore. Okay. As you know, the word Waqf, literally it means to stop, to restrain. But today I'm going to talk about how Waqf, the mobilization of its assets, that we can we should not restrain the assets and give it a better yield for the beneficiary as a whole. So I will give a brief snapshot of how Waqf is managed in Singapore. There is about 101 Waqf, and which have a total assets of about 650 million. And Islamic Religious Council of Singapore is actually a statutory board under the Ministry of Community, Culture and Youth. So all Waqf are managed through an act which is called the Administration of Muslim Law Act. And we are a very small country with about 15% of Muslim population in Singapore. So in terms of Waqf assets, we are not that huge in that sense, but we have tried to manage as much as possible, develop as much as possible the assets that is entrusted to us to give the best yield as far as possible. Like I mentioned, we have many philanthropies, about 101 Waqf, which was most of these assets are endowed to the Islamic Religious Council, which we are managing. So we have a lot of assets which is in property base. We are asset rich but cash poor. So today I'm going to go through quickly, because we have only 5 minutes of presentation given, how we have transformed many of these assets to give a better yield, and using the sophisticated and most modern financing structure to develop the Waqf properties. As you can see, the mosques in Singapore, we have about 70 mosques in Singapore, and most of these mosques are built through the contribution or monthly contribution from the Muslim employees. We have about 270,000 Muslim employees. So this money are actually contributed to develop the many mosques in Singapore. So this is a form of a cash Waqf. I like to share now our so-called iconic development, which is the Somerset Bencoolen development. This is a Waqf Bencoolen, Sheikh Omar Ali Al-Junaid, who actually endowed this property. It used to be a dilapidated commercial properties. About 4 properties yielding very low yield, and a mosque. We have transformed this particular property into a residential, commercial plus residential apartments, about 101 apartments. And we have used a very unique financing structure which is called Sukuk Musyarakah to actually develop this property. So in a sense, while we know that Waqf is something which is you know, you can't sell and so on, but I think it is a misconception, which a lot of these assets has a lot of potential, and by using the innovative financing structure, I believe that the return can be created multifold increase, and the benefit goes into the beneficiary as a whole. So these are some of the strategies that we use in terms of transforming most of these dilapidated assets with low yield, and giving it a better return and better high yield. This is also another development which is some time ago. It's a maisonette apartment which we developed, and is giving return to the mosque. This is a very unique, I want to share the last one, which is a very unique development. This is a development where we migrate all the Waqf assets from the low yield to a high yield asset, which is about 44 Awqaf, which we migrated to this one particular building. And the interesting part of this financing structure is that it is akin to the REIT structure. A REIT structure where each Waqf holds a shareholding of the property in that particular property, in that one particular asset. So that's where the liquidity comes. When formerly it is in a fixed asset, in a property base, one property maybe yielding very low yield, and now it is transformed into a higher yield, one single asset with shareholdings. So liquidity can be very easy, because you can actually exchange the shares with other Awqaf and so on. So I thought this is the way to move forward in terms of assets that we think that the Waqf asset has been not giving good yield, and this is one method where you can, transfer it to give a better yield. So this is the latest development where we use the financing structure of community funding to build these assets. So this is also where we can transform assets from a low yield to a higher yield by developing it and looking at the financing from the community, and also by very unique method of carving 99-year lease. Our car you cannot sell, but actually you can lease it out. So what we have done is to carve out a lease, so that that leasehold period can be sold, and the whatever the financing can be plowed back to the development. We have here Waris Investment Private Limited, which is actually developing these assets. It will be completed in 2016, inshallah, and there's still some investment opportunity there. And moving forward, it's not just to develop the assets that we have, but to create new Waqf. So how do we create new Waqf? Is to introduce cash Waqf, which is where we promote Waqf, the spirit of philanthropy, to the public, the masses. And Alhamdulillah, now we have about 7 million, and this fund are already invested in sukuk globally. And some of the sukuk we bought in sukuk in Dubai as well. So it's giving very good return. So while I've shown the assets which is in property base, now we are investing in fund management which is sukuk based. So we hope to grow this fund further. And I think we should not forget about the objective of Waqf for the benefit of the social community. So it is actually a vehicle of financing the Muslim community. The assets that we have, we should give the best return so that the beneficiary can actually benefit from this. And we have foreign and local as well. Our Waqf transcends boundaries. It's global. It's we have in Mecca, Medina, in Hadramaut, in Indonesia, in India, and so on. So the beneficiaries benefit from this Waqf. So I would like to end. Inshallah, I hope that the audience here will see that there is a lot of potential for Waqf, and these assets can be unleashed, and more returns can benefit the community, inshallah. Thank you.
Thank you very much, Dr. Shamsiya. I'd now like to call to the podium Mr. Thomas Paulson, Chief Executive Officer and Co-founder, Falah Capital, United States of America.
There we go. Great. Hello, everyone. Yesterday we heard a lot of great talk about the sukuk market, how developed, how sophisticated, how global it is in nature. But unfortunately, when we think about Islamic funds, Islamic mutual funds especially, unfortunately it doesn't quite fit that way. We have, I can't see the screen. When we think about global investing, especially pension funds, Waqf, we have to think about the long-term benefits. What is it going to be to invest these assets? How are we going to make them liquid to make our redemptions come and go? So what I did over a number of years, I worked in Saudi Arabia, was to really look at the Islamic mutual funds industry. What is it about? How does it work? When you think about performance. And unfortunately, especially in the equity funds, there is a tendency to have high fees, low transparency, and a lack of lack of performance versus the benchmark. So if we look at these funds, I just made a quick study, and I looked at global funds from a couple different jurisdictions versus a global index. And we see over the course of time, the index will usually outperform, but we also have to think about fees. Some of these, when we lose the value from the fees, drop us considerably. And if we think we're going to have an index play based upon an index and we have a low management fee, chances are we are going to outperform the Islamic active managed funds, not only from a performance standpoint, but also from pricing. And the other problem with Islamic mutual funds, unfortunately, is most of them are domiciled in closed domestic markets, meaning if we don't live in those markets, it's very difficult to buy them and sell them. There we go. Focus, country biased. And one thing I've come across as well, when we look especially in the GCC, is most Islamic funds tend to be locally biased. They invested in Saudi, the Emirates, other places, Qatar. And a lot of endowments, especially university endowments, they tend to have allocations that are country biased. And especially if they're government universities, the funding comes from the government and it's based upon the price of oil. But then their endowments tend to match the same allocation strategy. So unfortunately, if the price of oil goes down, is there going to be enough value in the endowment to cover the costs? But there is somewhat of a solution that could come our way, and this is New York listed exchange traded funds that track indexes. We have a lot of great Islamic indexes in the world that can be segmented for almost anything. Most are passive on these ETFs. They provide global tradability. And if you have global tradability, you open up the floor to a much wider range of investors, especially because we have growing themes. We have takaful firms in Africa, and you have to think about if you're a local takaful firm, a local pension, a local Waqf, and you don't have assets in your own jurisdiction to buy, what are you going to do? And so by doing an Islamic ETF play, we, one, have a good chance for high performance, low fees, high transparency. And the last interesting point about this is that we look at endowments, pension funds all over the world have flowed huge amounts of capital into these products. There's over $400 billion invested in New York listed products from foreign investors. These are pension funds, endowments. Chile, for instance, have over $16 billion in New York listed products. And if we also look at managers in the US, they're drawing huge amounts of capital from overseas. And the great thing about this is if we have Islamic ETFs in New York, we have the ability to list them on other exchanges around the world, to have a local distribution point. And the last point I will make is that this idea of index play is the long-term money you would use for your family, for your endowment. And one final point would be that there are Islamic asset management firms all over the world that are looking for growth, they're looking for tradability, and if you there's really no barrier to starting this in New York. So you could take a firm in Riyadh, Kuala Lumpur, and replicate what we've done at Falak Capital, put Islamic ETFs on the global exchange, which could benefit our industry as a whole. Thank you. That's it.
Thank you very much, Thomas. Organisers, the first screen here is not working. Someone can switch it on, please. I'd now like to call upon our final speaker, Mr. Abdullah Al-Fuzan, the Chairman of the Investor for Securities Co. Kingdom of Saudi Arabia. Thank you.
Ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Endowment or Waqf in Arabic language mean preserve and contain. It is an Islamic Sharia term defined as the preservation of endowment, which is an asset in cash or in kind. The Waqf system in the historical format devised by Muslim to gain Allah satisfaction and acceptance through the sharing in the building and expanding their communities. Western have copied the concept from the Ottoman Empire in the 19th century. And they name it civil society organizations. There are three types of endowment: the family Waqf, and charitable Waqf, and mixed Waqf. Aspect of endowment: Waqf has a religious, social, economic, culture, and human aspect, spanning all the walk of the social life, including mosque and related facilities. Call for guidance and schools, educational institutions, and libraries, sponsorship of the weak, poor, and health care. In our region, we have the huge endowment organization. For example, we have Endowment Research Fund by the Islamic Development Bank, and also General Authority Endowment in Kuwait, and also Endowment of King Faisal in Saudi Arabia. And also there are so many endowments coming from Waqf coming in Saudi Arabia through their university, and this is a new practice in our market to have endowment to or Waqf for university or schooling, like King Saud University or King Abdulaziz University. Also, we have so many private in our region, private Waqf, for example, Al-Rajhi Waqf, Al-Amudi Waqf. In the global model, the Bill Gates and Melinda Gates Foundation, this is the best example that we can compare it with our practice. If we talk about the size and the revenues about our Awqaf in Islamic world, we can, the estimated size of the endowment asset in the Islamic world exceed $1 trillion. Estimated size of the endowment asset or the Awqaf asset only in Saudi Arabia, almost 150 billion USA dollars. The world's largest endowments are in America, mostly which is are focused in education and health care. The biggest endowment deposits were recorded at Harvard University with value exceed 25 billion USA dollars. Endowment return globally range between 10 to 20% every year. Awqaf is a sleeping giant who can wake it up. After a great deal of research, it has become clear that the state of endowments in the Islamic world is suffering from one of the worst periods of negligence. This condition can be observed across all aspects of this industry. One of key concern is the key endowment are managed. This mismanagement can be seen as one of the key reasons why development and revenue have fallen off in the recent year. But as well, without stable revenues, the regularity of distribution of funds to the needy has this is a real tragedy, as endowment assets tend to be in high value prime location. Even with this fact in hand, it's rare that an endowment will produce annually yield beyond 3%. It's unfortunate to note it, but in random sample in Saudi market, we found out that 54% of property-based endowment suffered has generated zero income, only in real estate and only in land. So the income is zero. And they don't have also the cash to develop this land. So this is the main concern the main problem with most of the awqaf in Islamic world. They are in prime location, every corner. It has the asset value is huge, but the income is less than 3% comparing with the value of the asset. Endowment sector is neither the first nor the last front of fighting poverty. It is, however, considered the strongest weapon in this regard. It is a sleeping giant that needs to be waken up to fight poverty and hunger. We can go beyond that and utilize this sector as the most prominent factor for development in the Islamic world. Given the advice that practice and the difficult condition, endowment had to go through many weaknesses were manifest in the sector, namely empowerment of the awqaf asset, the decrease of their importance as a component of national wealth, and decline of their annual yield. Also poor return on investment. Various studies showing that the money Waqf didn't achieve their anticipated level of return on investment. They also failed to achieve aspired performance. In a number of countries, endowment were not longer investment concerned, with the exception of certain projects which could not be covered this administration cost. Also, integration Waqf fund in state fund in some Islamic country with nationalizations, and this has happened for 3 decades. Most of the fund be taken by the government, and they sell it in some country to finance their budget or to finance their cost of any war. Neglect of the Waqf property and failure to spend on their maintenance or to property care for them, with some of them suffering collapse and destruction, including appearance of the crack in some of residential and office buildings owned by the endowment foundations. Also, placing the Waqf administration under the state of the government in some countries, you can see it's impossible to increase your return in Waqf and awqaf by using the government methodology, or you should be thinking like a private sector. So this is kind of one of the big weakness, because some of the regulation doesn't give this awqaf to work, and you can manage them, or you cannot manage them like the private sector is doing. So you are all the time sticking with government regulation, approval for every step, so you will miss most of the attractive opportunity to invest. Also absent of the study and the statistic of endowment. When we did our research, it's really very hard for us to find reliable information about the awqaf. So our market research has shown that even these difficulties, there is a great deal of investment opportunity with this unmanaged sector. We, beyond this initiative, had concluded that the endowment market has a great ability to rebound and produce a sizable return through the collaboration to reach this goal of modernizations at the endowment market. Many modes of the market entire have been explored in order to minimize the time frame of entering this sector. Assalamu alaikum wa rahmatullah.
Thank you very much, Abdullah. Now we'll move to the discussion between the panelists centered around the successful management of practices such as Waqf, pension funds and unit trusts across the globe. What can we learn from the success stories around the world, and what have we not learned? I'll, I guess, moderate the discussion from the chair. I guess I'll ask the first question, and perhaps I will then flick to the audience for any questions that they may have, or questions that they'd like to pose to any of the panelists. Can I ask the first question of Thomas? I guess it's really important in terms of the development of Islamic finance that ETFs and the ability and the transparency of ETFs be fully explained. Could you please, and you spoke about ETFs in quite a shorthand manner, for those in the industry that's quite okay, but just explain what ETF is and why it's different and who'd invest in it.
Yes, an ETF is essentially an Islamic mutual fund or a mutual fund of any kind. Most of them are passive, meaning they track an index. Some are active management, but from a Sharia perspective, an ETF is actually an amazing product because any given day, my Sharia advisor, who I believe is in the audience, or investors, can click a button on the internet and they will see every single stock that is in our fund. And now that means from a compliance standpoint or a Sharia perspective, people can check on a constant basis if those stocks are all compliant or not. And this is something I think we're all searching for in the Islamic space is authenticity. How can we ensure that what we're investing in maintains that Sharia compliance over a long period of time, as opposed to a quarterly review or a yearly review of what are in these funds. But the other nice thing about an ETF is that when it's listed on a global exchange, it means it is globally tradable, meaning anyone can call their broker, go on the internet, or go through a global custodian, and they can purchase it. And with this in mind, when most of the funds are in places that only allow for local investors to buy them, it really holds you back in terms of global growth. I think that's what we're all looking for in the Islamic space, is what are the kind of products and the mechanisms that can spur on a global industry. And the last point would be that an ETF is just like buying a stock, meaning the minimum investment is one share. And this adds into the liquidity of it as well. You could invest $1 million on Monday and sell $1 million on Tuesday, or even within a half an hour time period.
Thank you, Thomas. Can I ask a question to Dr. Shamsia? Thank you so much for your presentation. But in terms of Singapore, like a lot of the other OIC countries or non-OIC countries that invest in Islamically compliant Waqf, there seems to be a focus on property. Property seems to be a very significant focus. Is that the case in Singapore, or did you use just some interesting examples that focused on property?
Okay. Traditionally, when a person, a philanthropist or Waqif we call it, wanted to endow an assets, it's usually in property. So what we have in Singapore is that historically all these endowed properties and in terms of the investment portfolio, you can see about 90% of the assets of Waqf assets is in properties. But currently, because of the very expensive property prices in Singapore, which is almost insanely priced, we are trying to get the public to continue to be a Waqif, to rekindle this spirit of philanthropy through the contributions of cash. So they no longer endow assets in terms of property, but in terms of cash. And this cash we pull together and invest this in a fund management way, where I mentioned about the cash Waqf, where we 100% invested. Now initially it was 100% invested in Sukuk and a bit of Sharia compliance equities. But we are also trying to balance the portfolio, so a bit of asset allocations, which will also be put into property. What we see as example of the Red House, which we are developing, and we are putting in like shareholdings in that particular property, not in hard assets where liquidity, mobility of the assets is difficult. So we are moving towards that kind of structure for the Waqf assets. So, yeah.
Thank you very much, Doctor. It seems like highly conservative and illiquid at this point, but moving towards the other way. Can I ask Dr. Shahril, some interesting facts you gave us today. 200 billion US dollars, 14 million customers. Amazing, he's seventh in the world in terms of size. EPF has done quite a massive task, and even though someone like me knows EPF very well, I'm not so sure the whole world knows about the excellent achievements of the EPF organisation. What is your vision to grow it from this excellent position it's in now? How big do you think it's going to get, and what are the kind of things is it going to do in the Sharia compliance space?
Yeah, like I mentioned earlier, I think in terms of the EPF, today we are at about 200 billion US dollars. We grow at an annual rate of roughly about 10% compounded every year. It's a combination of basically the new funds coming in from our contributors, as well as basically the reinvested profits that we make on our fund. We expect the fund to keep growing. I think we still expect that we'll reach about 1 trillion ringgit in size, or roughly about 350 billion US dollars by the year 2022. And one of the things that we are looking at essentially is increasingly playing a more global role in terms of our investments. Today we're about 23% invested in global markets. We expect that over the next few years that will extend to probably about 30% or even more. But what's more interesting from the Sharia aspect, I think, is that we are now gearing up to increase our total Sharia compliant assets. Today it stands at about 40%. I think in a few years' time, we hope to achieve a roughly about 50-50 balance between conventional and Sharia assets. And given the way we are progressing and the demand among our membership in Malaysia, we probably will look at introducing a fully Sharia compliant retirement fund at some point in the future. That's something we are actively looking at today in terms of planning, and it will fulfill, I think, a big gap in terms of a state sponsored or state-supervised national pension scheme, which is fully Sharia compliant. Probably one of the first in the world we were to achieve that. But I think what we are doing, I think, is more, hopefully, will help other countries as well who are looking at setting up their own schemes. We know we've been working very closely with Indonesia and other regional countries to set up similar schemes as well. And I think basically that's where the big growth area in terms of institutional Islamic funds will come from in the future.
Fantastic. Thank you so much. Question to Abdullah. So we're waking up the sleeping giant. What is the giant going to do? What would be your dream as to what that giant is going to do?
We want to wake up this giant because this giant is still sleeping from, I think, 300 years. We want the size of Waqf in Islamic world is almost $1 billion, $1 trillion. And the main problem about this Waqf is regarding to the return. The return is very, very low. It's less than 3%, comparing with any Waqf or endowment in the Western countries. And the main problem about this, because in the financial sector, it's most of this Waqf, they don't have cash to develop the asset which they have in their hand. And also, from the beginning, and this is very important, when you write the deed of the Waqf, it should be written in the way that you can have a part of this revenue for the maintenance, for the development, and other part of the asset of this Waqf. So I believe that if we develop the system of dealing with the Waqf regarding the regulation and the laws, because most of the banks in this region, it's impossible for them or for them to finance any Waqf to build their property, because they cannot take the land in their hand. So this is the main problem. They don't take in their consideration the right of using this land, so you can get a loan to invest. So most of the businessmen don't invest any single real to develop this kind of properties.
Thank you very much, Abdullah.
You're welcome.
Can I ask the audience if they have any questions? There are 4 people in the audience with microphones. I can see a hand down in the right, just behind you there, sir. Can you please state your name?
I'm Dr. Ghazali with another hat. I am a member of the Council of the International Center for Waqf Research in the Islamic International University of Malaysia. I would like to question all of us in this hall and also the members of the panel. See, one of the things we talk about Waqf or mutual fund or pension is the end of the two economies we're talking about. Many of us are talking about how does Islam serve humanity in terms of their well-being on earth. I would like to ask all of you, because I'm hearing from Mr. Thompson asking us to go to New York, and we had a bad experience in New York because all the pension funds in Harvard and lost in the last two crises. Therefore, they were not good managers. My point to you is that we're not Muslims today. Remember, we're not talking about instantaneous profit. In Islam, Allah has mentioned that you invest in Him, He gives 700% return. You ask Him for 3% return on this earth. So we are waqf the dunya rather than waqf the akhirat. This is happening in the Muslim phenomenon. Therefore, if we talk about the opening chapter of the Quran, Al-Fatiha, we should be talking about Al-Fatiha economy. Because it is not Sharia compliant. It should be Sharia fair, a base of the 5 major pillars of Islamic lifestyle. It is religion, yourself, security, intellect, property, and progeny. All this will take care in its old footing. So my point to you is that we cannot go speculation. I know you mentioned that every day you go tick your tickle, and that is speculation. Islam forbids that. But if it's real economy and divorce, we do not divorce. So my point to whether we're in pension fund, whether we're in Waqf fund, whether in zakat, we must be very clear of the philosophical and conceptual underpinning of this innovation we're talking about. Therefore, Muslims today fail because they have not really mastered the worldview of Islam in having a parallel system to the runaway capitalism of today. And therefore, I would think again, Mr. Chairman, since you are from Australia, to really relook back in our assumptions and conceptions, because I find a dangerous trend in the thinking today by you, Gustav and Mr. Thompson. Thank you very much.
Thank you. Thank you. So can we please keep it to questions, not comments, if you don't mind? I agree with you, Doctor, on some aspects in terms of the difficulty and the assumptions that are implicit in all that we do. However, there is, if we do not get it absolutely perfect, if it's not utopian, then we've got to draw a line somewhere and say, do we do nothing or do we do something? So nobody's arguing perfection, I would argue, but the whole Islamic finance law could be argued that it is by exemption in any event, as no Muslim country with a Muslim whole ecosystem that we can apply in any event. So there are a lot of debates, a lot of arguments about what are the assumptions, what are fair, what are Islamic and what are not, and how you actually execute. And I think to be fair and frank in terms of a debate of our esteemed colleagues, the context has to be well understood. And it is, at the end of the day, an argument as to do we ask for utopia before we act, or do we act on what we have today? I'll ask some of my fellow panelists if they'd like to comment. And if they would, I'm very happy. If not, I'll move on.
Of course. The whole point of having New York ETFs, New York City ETFs, is that idea of global tradability and credibility. In my experience, dealing with institutional investors, especially in Saudi Arabia, is they want something that is highly transparent, highly liquid, and highly regulated. So it's more often than not, they are going to work with a foreign manager. So as opposed to something local, unfortunately. But the idea is that we put it on New York and we make something that is globally different, that fills a very specific need from an institutional standpoint, then these are the products that can be moved on other exchanges, to Riyadh, to Kuala Lumpur. And it's not saying that it's a US-only product, it's saying that the infrastructure is in the US because this is the home of the ETF universe. There's $2.4 trillion in the whole industry, and 73% of that is in New York products. So if we're going to have a global Islamic funds market, we need a mechanism to facilitate that.
Thank you very much. One last question, and then I think that'll be the end of our session. Sir, over there.
Assalamu alaikum wa rahmatullahi wa barakatuh. I'm Abdul Razak Dania, and I operate in the upstream and downstream oil industry back in Nigeria. I just want to find out, because I realized I'm a young man, and I realized that what goes on generally is we tend to do a lot of talk and less action. And the panelists there, you're professionals, you've committed years, and you've acquired a lot of experiences over the years. If we could get, I just want to ask you now, if there are impetus you could give to policymakers in the Islamic world today, because I believe that is what the Waqf is trying to achieve. The policymakers and government decision makers, and then the investors themselves practicing in the Islamic world on what to do, short-term and long-term solutions to get this thing working. Because if you have 300 trillion and you have that number of Muslims in the world that could get this thing and move it into a higher level, I believe it's about time we got the Waqf and the EPF going. Thank you very much.
Thank you very much.
I'll take a stab at that one. I think one of the things that we notice is fairly lacking in the Islamic world, basically, is the kind of institutionalized collective saving schemes, which are similar to what the EPF does, or in Singapore the CPF, whereby you basically provide a system whereby the common person in the street has an ability to actually save over the long term and have it invested for them in a very efficient manner. Just to give an example, the EPF, like I said, we manage for 14 million people. We manage about $200 billion US. Our cost of managing all this money is basically less than 0.1%. So it's a lot more efficient than individual schemes of a similar nature. So I think that's one of the things which I think, if you look at the member states or the Islamic states, could do a lot more on, really, is to promote and I think to regulate, to have this kind of Islamic saving schemes. It'll enable, I think, the larger Islamic community, greater investing power in a global environment.
Thank you very much, Datuk. Any other comments on that question? No? Well, I'd like to bring this session to an end. I'm afraid we've covered a lot of territory in a very short period of time. Sorry, one more? There's, which? Yes? Sorry, one last question. Sorry, we can't hear anything up here.
Hello, this is Professor Jahid, Chairman Islamic Bank and Chairman Islamic Bank Consultative Forum, Bangladesh. We have introduced this Waqf in our bank itself. Two types, this endowments of in respect of property as well as cash. I want to ask the honorable panelists, we have decided to invest to those or for those and by those who are under the poverty level, who has got capacity but no money. And bank will be the Waqf in this respect, that is the managers. And is it acceptable by you? And number two, to me the main important point is to awaken the whole Ummah that this was our one of the basic religious duty to make endowments Waqf. And we have run for long years on it, hundreds of years. And can YC and other organizations like YFI and many organizations, can they awaken the whole Ummah that this is their basic responsibility to make Waqf, and Waqf has its own way of arranging and arrangement. Would you agree to that? Thank you.
Thank you very much. Anybody would like to comment on Waqf? Okay. Doctor?
Okay, Bismillahirrahmanirrahim. That's a very interesting way of creating Waqf through a bank and giving it for the poverty alleviations. I think, again, like I mentioned in my concluding remarks, that there are many innovative ways that we can create. As it is, Waqf is actually an ijtihadi law. So there is a lot of leeway, a lot of innovation, but we must, I think, we must base it on the objective of the Waqf itself, meaning to serve the community and to help the community in essence. So the true meanings of Waqf, and if it's not against the Sharia, it's not against any law, and if it's very innovative and it can help the community as a whole, I would think that we should try and we should move forward. And there are so many, our own experience back then, there's a lot of fatwa, and a lot of religious impediments, which is unnecessarily created to move Waqf into the next level. So I believe we can improve. We can look at the means and ways of looking at certain parameters, and we should move forward.
Thank you very much, Abdullah. Last comment.
I just want to answer a question here. If you are a policy maker, what are you going to do? I think the first decision that we can take it, we should start from where the others end. There is a unique practice in Western countries regarding to Waqf. We can take their experience, their rules, their regulation, and implement it in our system. We don't need to spend years of years studying, but we can start from what the others already did. Thank you.
Absolutely agree. With that, I'd like to conclude our session. Thank you very much to my fellow panelists. Thank you very much, and we'll be around for a little while if anybody has any specific questions. Assalamu alaikum wa rahmatullah wa barakatuh.